What is up, guys? Back with another video, and we are live again on an account for TradeDay's 50K evaluation. Third time's the charm, is it? We'll find out. We are going to take our time with this evaluation, by the way, because the past two times I've been getting better and better and closer to the goal, if you could say that. And both times my profits were lost in about 25 days, about 13 days of trading, but it's a longer time span because we don't trade every single day, right? Saturdays and Sundays we don't trade, and sometimes during the week we don't trade every day. So about 25 days pass and I get anxious, I start doubling down, I get a little cocky, and boom, in 1, 2 days, 3 days, the account is gone. We're not gonna let that happen this time. We're gonna continue throughout the evaluation the same way, taking small losses, taking good profit or even small profit, just build it up slowly. What is the rush? There is no rush. We want to pass this, not just attempt 10 times so I can have 10 playlists on YouTube about the same freaking evaluation. Third time's the charm. So we're gonna take our time. That's the rule. That's the game of the strategic engagement. Take time. We're gonna consider time as a very important factor in all of this, whether it's how much time we trade per day, how much time are we in a profit versus loss ratio, and time is included in those parameters. We're going to include time. How much time are we spending exactly on the computer versus profits, losses, and number of trades, that kind of thing. So if you've never been in this channel, it's important to know for you that this is not financial advice in any shape, way, or form. And in fact, the content presented in this video is for entertainment and educational purposes only. The views and opinions expressed are solely those of the creator and should not be construed as financial advice. The creator does not sell any products or services, nor is affiliated with any of the trading platforms or tools mentioned. Trading involves risk and is not suitable for all investors. It is important to conduct your own research or consult with a professional before making any investment decisions. The creator assumes no responsibility for any losses or damages arising from the use of this content. So fresh 50K account, no trades yet. Whew. We are in a bullish looking market, but just you wait. There are possibilities of us going lower. Let's check it out. Go a top-down analysis. Start with a 15-minute. The music is a little too lively for trading. It's like dancing salsa. All right, we got the low that was just put in not long ago. Well, I mean, like today. $902. That's yesterday at 9:30 a.m. We got a huge drop. We've been going up the whole day yesterday, up, even today. This is the low in the AM. So 3 a.m. we hit this low. Price, that's where price left to trade all the way up there, leaving this area, this S&D zone. Oh, look at all this high over here. There's a big high over here. Ooh, tap right in the 50% of that. Right in there. Look at that precision. I'm not trading at that time. Can't possibly be in the monitor all day, right? We got this high here that was ran. Well, that's pretty good looking. We got this low. Let's call it this high here. That low created this high. So kind of a weak low. That's why it was taken drastically. This low failed to put in a new high here, 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 down. So this low without the wick with the wick. Let's put it in between the wick or no wick, right there. Look at the little zone. Holy moly. That's kind of what this is. I don't like the green because it's gonna make me think bullish, but let's do that. And look, we got almost a tap on that line, so we might head it down there. And maybe range around here. We got the low put in here. Again, at like 3 a.m. Price hasn't traded any lower than that. So that's a huge range we got working here. Basically, the whole thing is... Oh, shit. All here. Right there. So we'll see what happens there on the 15-minute chart. Let's go to the 10-minute. We got kind of the same stuff, just a little smaller here. We're going to concentrate in this area. We got the whole imbalance. We don't know what to do with that. There's nothing there. I hate when that happens. The heck. I don't know how to get rid of that. Good. Get another 10-minute chart right here. Oh, it's still there. What the heck? There we go. And bounce off here. If we don't get any breaks, we might consider getting in. Or if we do get shallow breaks like this one, and then maybe place an order here, stop order here, we might trade higher and cover this area, this imbalance. But the thing is, this one is pulling more action than this one, because here we only got this amount of imbalance. Here we have all the way here, all the way down here. So big range for the imbalance there. Basically, all this. Let's do imbalance. Let's do that. Then we got the high, of course, becoming our relevant high. All right, let's see what happens. Got this area here. Important areas, bunch of them. Bunch of areas that could be of importance for us. Damn. Bit of undecided. I wanted it to go my way quicker. And the fact that it's not going quick could be, you know, a higher range. I like how the MES versus the NASDAQ gives me a little more time. It's a little smoother. I don't have to be so quick as the NASDAQ to negotiate my trade. Okay, well, we should get a rejection from the top or not, you know, or not. We didn't, we did run the very low time frame low here. But yeah, it might go higher. Probably could have waited to get a better entry to the upside. Right? We didn't get that one. I think I should have expected that, actually, the run of this high from here, because we didn't really break. We just ran the lows, and because we ran the lows, probably gonna run the high too on that same swing, on one swing. It's not like, for example, here. Well, here it did happen, actually, but I thought the area was more like here and then push down like this one as well, but turned out to be more like this one, where the highs run the highs and break them. So that's what this might end up being, just a run of this high even before we come down again. So a little bit too premature on that order. First one of the challenge. All right, we gotta pick it up. We can't be in this drawdown, okay? All right. Fridays, man. Fridays are tough. I don't know if you agree, but to me, Fridays are tougher to trade than any other day. Maybe Mondays also. Mondays and Fridays. I find the least profitability. See, we ran the highs. Now we might trade lower, but who knows? Music's pretty bad. Oh no, I hate this guy. Oh. Here we go. I don't know. YouTube approved songs only. That's why they suck. All right, so yeah, I mean, could be a good trade to go down here, but I'm gonna wait a little longer. I guess I'm not as sharp as I'd like to be for today, and it's already showing. Looking like a flip. I'm sorry to say, it is looking like a flip. Looking, we still. Jeez, that's rough. That's rough to tell. I'm not gonna consider it a flip though. But you know, where are we flipping from, right? That low. The last range before price left to the downside, never came back up until now. All right, we're cooking, we're cooking. Let's do this, guys. Let's do this. Pretty clean break. I mean, mitigation of the areas as we go up. Except for this area here. Well, no, it was all mitigated, basically. That's why I think, bam. Yeah, that short was definitely really premature now that we get a bigger picture of what's going on. Of course, we didn't anticipate a flip. We thought a continuation. But we had signs that we might get a flip pattern. We still have to run this high over here. I don't think we're going to do that. That would be good for us because then we'll be at the top of our range. Maybe trail it down. Let's look at the daily. It's always interesting to see the daily because, of course, we have some crazy action recently. Yeah, look, the flip is back on. Little run of the highs. Will we break today? Probably. Probably will end up here, but maybe I don't know. It's tricky. The daily is giving me less confirmations of a drop, but there was just huge imbalances left on the shorter time frames that are not showing clearly here. Because basically all this area was mitigated by these 2 days, 3 days, 4 day, well, skip 1 day, but then it became mitigated again. So this area tends to just maybe consolidate more Woo! But bangle. Man, imagine the people that took that move right here. When, no, maybe here. If you got any here, that would be good because you see the break, then you will expect 50% of this low, this high, right here, take off. That would have been a really good area to scalp, basically. Oh, yeah, you cannot see my monitor. I'm not on the other monitor. Okay, I'm talking about this area here, look. Go to the 20-second. What happened here was we had the low, ran that lows, didn't break. In the 20-second it did break, but not in the 1 minute. It's a wick. But on the 20-second it did break. So that's good to pay attention to also, actually. We drop from here, break, go up, not break, go down. We see, okay, we're not sure yet, right? We're not sure. We might go lower. That's why I traded down. I wanted to catch the move downwards. But what happened? Not even mitigation of the 50% over here. Actually, yes, mitigation of the 50%. So my entry, that was what was really bad about my entry there, was that I did not respect this 50% here. Not that one. I'll show it to you. Okay. This one. Okay, so once it this high here, right? And then okay, whatever. This high and this low. Yeah, right there. You see 50%. And I traded before downwards before testing the 50%. So my scalp down should have been waiting for maybe a break of these lows, run up, and then take it lower. So instead of almost running the high and getting in just because I'm in a, let's call it, sell, supply, or yeah, supply zone. So I go down, my order doesn't get triggered by this little move. Instead, it goes against me. Now we have the break of the highs, which could mean a flip. And now we have maybe confirmation that here is really juicy. And this is where we're going to short from, because we can set up our high right there and the mitigation of at least these areas here. Let's see. Whoa, a lot of action. Oof, oof, those are dangerous. Oh, those are dangerous. Oh boy. Oh no. Yeah, that's not good. gonna go up. Oh, it just gave me a discount to get out, but I didn't. Should have taken it. Wow. Yeah, once I saw that movement, I should have gone out. There was a movement that it made that was really harsh, and so there's a lot of manipulation. We don't know how high it's gonna go to manipulate. I don't think we're at the highest. Wow. There. Oof. Oh, finally. Man, that was brutal. Well, not a good start. We're definitely not a good start. But we're gonna take our time with this evaluation. No need to rush. That's it for the day, for this. Yeah, we cannot lose any more today. And we got the flip. We don't know what we're doing here. We're in dangerous territory. So we're gonna get out, take our loss, come back the next day, which is Monday, unfortunately. But thanks for joining. I'll catch you on the next one. Tough day, but we're gonna take our time and we're gonna pass this stuff. All right, take it easy, guys. Bye.